On Thursday, the VIX dropped more than 10%. It was predicting a down day for the S&P 500. We got it on the S&P 500. We were down about 11 points. The VIX was down on Friday 1%, just over 1%, to close just above 16. Still have the 50, the green line, above the 200. If the S&P tries to rally further next week, bouncing off horizontal support, talking about in this video, deeper into the 5,700 area or towards 5,800, volatility can be pushed down further. Start to get a sell-off. Watching to see if the VIX gets back above the 50 period, the green line right here, getting back above the 50 period and staying above it, then volatility will return. When the VIX gets above its 50 period moving average, bad things start happening on the S&P 500. Right now it's below it. We know that the 50 is above the 200, so again, good chance we're likely in a topping process. But the VIX predicted the sell-off that we had on Friday, and the S&P recovered off the lows, but it still ended down. I'm going to talk about Nasdaq later. I'll mention something here in just a moment. Please support the channel with the link directly below. It'll take you to a secured site. You can donate any amount you want. Like the charts, you like the indicators, let me know that by supporting the channel. We made on YouTube is through sponsorship. I don't do any of that. I turn those offers, they contact me all the time. I turn them all down. I don't want to sell you a bunch of junk you don't need. I want to send you to websites that offer you bonuses to get you leveraged up, sell you gold at ridiculous commissions, 2 and 3 time commission levels. I mean, it's a lot of shady stuff out there. So I just ask that you help out and do what you can, straightforward. I put it all out there, but I do need to hear from you in order to make it work. Please follow the link below, take you to a secured site. You can donate any amount you want. Really be encouraging to hear from you. Thank you for your consideration for that. I'm going to talk about the Nasdaq more in the video. Talking about the S&P, the Nasdaq, and the Dow. Tap ring parameter here in the 60-minute chart go positive. We've got the 50 back above the 200. The green line is the 50. The black line, the 200. We had that breakout. I told you whether we pull back and break out or break out. I was looking for a breakout. Now I'm looking to see if this gap is going to get filled sooner rather than later. Maybe we do it immediately. Maybe go parabolic like we did over here. We see the S&P peak first and then fill the gap later. However it unfolds, and we may do it as soon as next week. Good chance we peak next week if we fill that gap. I'm talking about that in this video about when if we peak sooner. What if we peak in late September here rather than dragging it out into early or mid-October? Maybe we do it sooner rather than later. S&P moved to a new all-time high. 2022, it peaked the second week after it did that, showing you the charts. Yeah, just be open-minded to anything and be ready. But this is bullish right here. So again, whether we pull back further or if again, S&P pull back to horizontal support, Nasdaq pull back to the peak there with the Fed, we bounced out that level. So again, if we can rally further, again, which would be several hundred points from where we are right now, this 20,400 area. As long as this chart remains bullish, we can continue to go in that direction. Make it, a parabolic move like here, or like down here, or like right here. These parabolic moves. And from this week's high, it was 19,845. We're about 2.75% away from that high. A little bit less than that, or a little bit more than that from the close, but from the high that we had, it's about 2.75% higher, and we're there. So again, we'll be watching. Do we get something like this? Just be aware of, again, bring parameters positive, 50's back above the 200. We had the breakout of the downward trend line, and I'm looking for this gap to be filled. So do we get there sooner rather than later? Do we pull back and then go try to do it? We'll see how it unfolds. This video, I'm going to be talking about that, looking for a top. That could be next week. That could be in the weeks that just follow on into early October, maybe as soon as late September. Next week, looking for clues. I'm watching this gap. But this is bullish. And do we get a parabolic move that just takes us there? If so, we could peak as soon as next week. Or maybe the week after, but look, think we will soon see a top develop on the Dow, on the S&P, this lower high on the Nasdaq. Might want to watch the video all the way through. I'll show you some of the things I'm looking at, some of the things I'm thinking through. Again, maybe the S&P and Dow peak before we fill this gap on Nasdaq. That's another possibility. My guess is eventually we're going to fill that gap. It could be as soon as next week. So we're not that far away from it. We're within striking distance of it. You keep that in mind. I just want to continue to talk about the S&P. The price action here, sell off, the run up, the sell off, lower high, the higher high. It looks very, very similar, just a little bit bigger of a pattern, but it looks nearly identical to this January 2022 top. I've been talking about what happens when we get the first cut. Happened in the past in history, seeing things a little different. In the past, while we've had a rally, at least we did in 2001 and 2007, this time different. We had a sell-off, turns the first day. We got a massive short squeeze the day after. What happens with these institutions, they play a bunch of games. Nonetheless, Nasdaq broke the downward trend line I was watching, and we talked about that. Break above it is bullish. Told you we might pull down off of the Nasdaq trend line, no momentum before breaking out, but I told you I'm looking for rally to 20,400 on Nasdaq. Got the breakout. What I'll be watching now is, do we pull back, see a top over a few weeks into early or mid-October, see something sooner in late September. Now, again, I'm going to show you the weekly charts. I want to continue to point this out. Again, peak over here, we sold off, we got a lower high, sold off, went up, news highs for about a week and a half or so, completed the diversions, and then began to sell off. We sold off 15% very, very quickly. I'm going to show you this on the weekly chart, but again, keep this in mind. And again, a very, very similar pattern here. When the diversions completed, eventually the S&P 500 dropped back below the 50, green line right there, dropped below the 200, went back up to the 50, got rejection. Everybody said, oh, it's over, it's over. More selling. And then a rebound back above the 50 and 200 as they got a death cross. Just some things to be watching over here. Drop back below the 50. I've talked about tops in 2001, 2007. One peak was 17 days, the other one was 19 days. 3.5 weeks was one, and then over 3.5 weeks, just under a month. It doesn't have to do that. It could do something like it did over here. I told you with the Fed, first Fed cut, I was expecting new highs. Have that. Here in 2007, we saw the rally with the Fed cut and then peaked about 3.5 weeks later. But the point right here is we only went about 2 weeks above this peak right here, which is very similar to what happened in 2022. I'm telling you, look, over the next week or two or three, I'm looking for a possible stock market top. If you look at this on the weekly chart, again, it was 3.5 weeks later. This was the week of the Fed right here. 3.5 weeks later, we peaked. Very similar to 2022. Here at the 2007 top, we peaked after moving to a new high for 2 weeks. So given that, if we take this daily chart of the S&P 500, we look at it on the weekly chart again, looking at this pattern right here. After we moved to a new high, about a week and a half later, we peaked. Now here it is on the weekly chart, and look at this. Very, very similar. Pulling back to the 20-week, pulling back to the 20-week. Big rally, sell off. We got a lower high. Finally, moved up to new highs. First week we rallied. Intra-week high 48.08. A little bit higher the following week to 48.18, 65, and then we sold up by the end of the week. I'm telling you, look, I'm watching the different ways that this could play out. It doesn't have to go, oh, okay, 2007 we went 17 days, so it's going to do that exact same thing again. It doesn't have to. I'm just looking at what's happened in the past. So looking at the 2022 top. 2001, oh, it was 19 days. It may go for several weeks, but it may only go for a couple of weeks. Just watching to see what happens. Now again, here in the weekly time frame, we busted up to a new high. Here we busted up to a new high. Following week, we exceeded that level. At the end of the week, the reversal had started. We completed the diversions. We have the diversions in play now on the RSI. We've moved to a new high. Looking at this trend line right here as a possible area where we might stall, or this trend line that we broke the trend line, we back tested it. Do we hit it again? And they intersect in that area. Again, this may go shorter, go a little bit longer. It may go a couple weeks. It may be, though, that it happens sooner rather than later. But again, I'm looking for clues. But once the diversion's completed, ended up dropping back below the 20-week moving average. That was it. But I'm watching the diversions here on the RSI, watching the MACD. Told you again, you can see something similar to what we had over here, where we had the diversions originally from the peak right here. We ended up forming one right here, which again is what I think is happening. What happened right here is we crossed over with this peak at the November 2021 high, and then we turned right back up and we tagged that signal line and turned down off of it. Could see something similar here, where we either try to get above the signal line or reverse off of it. The point I'm trying to make is that even though 2007 we rallied for 3.5 weeks, the time we made a new high was only for 2 weeks above that level. So again, we're now 1 week above the July high. Over here, again, we were 2 weeks above it, and that second week we moved to a new high, but then it was a reversal bar. So we'll be watching what happens sooner rather than later next week. Drag on a little while. Do we see something happen here in late September? We see a top develop over a few weeks, maybe in early October or mid-October. I don't know the future. I don't know the future. But we can look at mathematically based indicators and have a pretty good idea. Well, a divergence is developing historically. Divergences have marked tops and bottoms. A bottom over here, a top over here. If we are already forming a divergence, and we are, the MACD is not turning up to a new high. The RSI is, again, making a lower high. We're likely setting up for a reversal. Doesn't mean we can't go higher like we did over here. Just telling you, look, I'm looking clues in the daily time frame. Once we peaked, are we going to drop back below that 50 period? Here in the 20-week or in the weekly time frame, once we peak and the diversion starts playing out, will be validated by dropping back below that 20-week moving average, the blue line there. Some things to think through, because technical analysis, it looks at probability, it looks at support and resistance. It isn't some fake fortune-telling nonsense that S&P is going to peak on October 3rd, 9:36 a.m. Looking at mathematically based indicators, probability. So again, early this week, we've got it has now canceled the recession. Everywhere, all over social media, financial media. We're now going to have the soft landing. Fed cutting 50 basis points ensures we're not going to have a recession. Recession indicators are warning that a recession is 3 to 6 months away in all likelihood. So again, I don't know if this goes 2 weeks like over here or 2007. The Fed date, 3.5 weeks, but from when we made a new high, we were just 2 weeks above that level. You think there's going to be uncertainty going into the election? Usually is. We know tensions are heating up in the Middle East again. Plans have already been approved for a ground invasion before the election into Lebanon. Tensions are still rising. These geopolitical issues, sometimes they impact the stock market, sometimes they don't. You just never know. Some volatility in the markets leading up to Israel's invasion of Gaza. When they did it, markets bottomed. Moving into, and initially there was a little bit of volatility, and then the market shrugged it off and ignored it. Who knows? Again, I'm just telling you, look, we should pay attention to what the catalyst may be. But I think the main thing is the market's going to begin to price in recession. Powell went out of his way to tell us how strong the economy is, and as I said earlier in the week, I think Mr. Powell protesteth too much I think the Fed is really concerned about the labor market, especially with the fake numbers that we've been getting out of the Labor Department. I mean, we're starting to see some real weakness there. Triggered the Psalm rule. Mr. Powell has shrugged that off, but again, it's not going to be wrong. It's been accurate for decades predicting recessions. They say, oh, this is going to be like 2020 and 2021. No, it's not. The Fed can't lower rates down to nothing overnight because inflation will come back, as I've said. We had the QE, that was inflationary. Government stimulus checks, that was inflationary. And right now we have recession indicators warning we're going to have a recession. When the Fed started lowering rates in 2019, we didn't have that. Now you have a very similar situation that you had. The Fed cut rates in 2001 and 2007. The recession signals were in place and warning a recession was about to happen. These people running around telling us, oh no, the Fed's going to lower rate. They have this new bull market. Well, if that's the case, you got to somehow be able to manage to dodge a recession. And the rally this week, day after the Fed, options expiration, by the way, too. The big rally there on Thursday, day after the Fed pivot. Rally is that, oh, we're not going to have a recession. Fed's canceled the recession. Again, this soft landing nonsense. I'm telling you, the recession indicators are warning we're going to have a recession. Not going to be wrong. So here, again, I don't know if this goes 3.5 weeks. I don't know if it peaks next week. Just go 2 weeks above the previous high like we did over here, like we did in 2007. Once we moved to a new high, we were there for 2 weeks, and the reversal happened. Maybe shorter. A 3.5 week period from the Fed pivot. May go a few weeks, may not. It may peak by late September. It could go as long as early October or mid-October. Some things to think through and ponder. No, again, we could peak as soon as next week. Again, I'm continuing to watch this trend line. Our high this week was 1533. I told you we probably moved to the 57.33. We probably would move to the 57.50 to 6,000 level. We will continue to rally. We may just peak 57 or 5,800 level and then start to reverse. We'll see how it unfolds. I'm looking for a top, then a reversal, and I think that will usher in the bear market. Once we peak, I don't think we're going to see these highs. We have a confirmed bear market dropping back below the 50-month moving average. I think you're going to see these highs for a very long time. I think the next bull market will make a lower high. We're likely going to see the bear market go on through 2025, maybe some of 2026. So I'm looking at this 2022 top, and again, a week and a half later, we peaked. That second week, we peaked and we reversed. 2007 top. Again, we went up for 2 weeks, started to reverse the second week. We still had a positive close, but you got a little topping tail. And by the third week, you had a sharp reversal. Just some things to pay attention to. I said, with the Fed pivot, it went on for 3.5 weeks. By the time you made a new high, you would peak that second week, similar to 2022. Just trying to tell you, it may not go 3.5 weeks. It may do it sooner rather than later. About this monthly channel on the S&P 500. I've talked about the red trend line underneath the black one here, excluding the shadows from 2000. And we hit that this week. I was eyeballing it around the 2750 area. We hit 2733, we hit it. Okay, we may go a little higher. Get the black trend line here, including the shadow. That's just slightly higher. But again, this is a long-term monthly chart. It was highly probable that we're going to turn off of one of these trend lines, begin to move back towards a pandemic low, more likely this midpoint of the channel. I think we're going to have a bear market down to that level. I think we'll bounce. I think the bull market will give us a lower high, and then I think we'll eventually come down to this lower boundary with the next bear market. Bear market is likely going to be associated with banking crisis, with the bank's exposure to the commercial real estate sector. Next bear market is going to be associated with the debt bomb exploding. So those are the next two bear markets. And again, you get these long periods of drawdowns like I've talked about, 13 years, 16 and a half years, 25 years before you made new highs. You know, I've talked recently about valuations telling us that we're going to have, like the Buffett indicator, cap to GDP. It's at 200% right now. Telling us there's going to be a great reset. Sheeler P ratio, another valuation telling us the same thing, that we're going to have a crash. Time it gets above 30, you get a crash. But we got to have a push back below 30, but there's got to be a great reset, either fair or undervalue. Nevertheless, I digress. If I exclude the shadows over here at the 2000 top, again, you could see the red line here. We're slamming into it, but not quite reaching it. Just slightly under it. Before we were near it. We were near it, but not reaching it. And here we're just slightly under it now. Again, we may see the S&P peak sooner rather than later. Not go 17 or 19 days, 3.5, 4 weeks. You just move a week or two above the July peak and then top out. And that could be as soon as next week. So just some things to be aware of. You got the Dow slamming into the 125-year trend line. Nasdaq's already moved off it. I believe Nasdaq's already peaked. Just be aware of that, again, we're likely a topping process. And once it's done, a reversal and begin to usher in the bear market. And at the Dow also, again, I think the Dow completing a top, coming into this 125-year trend line. The 1929 crash was, where the 2000 top was, 2022 and now 2024, forming divergences in the monthly time frame. The Dow's probably going to tank all the way back to this midpoint right here. You got people out there telling us, all over social media, oh no, we're going to not have a recession now. Now the Fed's going to give us a new bull market into 2025 and 2026 to 2027. The market's over. That was 2022. People that told us it wasn't going to happen. The bear market, it's already over. Poppycock. It wasn't a bear market. It was a corrective phase, longer-term bull market. Never dropped below the 50-month moving average. Oh, we dropped more than 20%. We dropped 27.5% on the S&P. So what? During the pandemic, we dropped 35% in 3.5 weeks. Was that the shortest bear market in history? Of course it wasn't. A crash, a major correction in the longer-term bull market. So just be aware of these longer-term trend lines. Again, when we get the peak in, which is probably going to be very soon, probably not going to see these highs for a very, very long time. Now, again, I think the Dow is topping out. I told you, again, the divergences in the daily time frame here in the weekly time frame, we're slamming up into and just overthrowing this trend line. Sometimes the Dow peaks ahead of the S&P. Other times they top together. See what happens here. Got these negative divergences on the daily chart, the RSI, the MACD. So I think that's going to begin to play out. A topping tail with the Fed pivot right there. The candlesticks are meaningless unless they get confirmation and a follow-through. It was negated, meaning that it was canceled out. We closed back above the high. You've got this divergence going on. Slamming up into that upper channel line on the weekly chart. That long-term trend line, 125-year trend line on the monthly chart. And I think the Dow is forming a top, and it either peaked this week or it could peak next week. Got these divergences going on the intraday charts. See the Dow come up here a little bit higher and then begin to turn. Doesn't have to. Again, just watching these divergences form on these intraday charts. Told you the Nasdaq, I thought it was peaking on July 10th. Told you that the very next day. I told you leading up to it that I thought it was going to peak, likely with the CPI data, because resistance it was hitting in the weekly time frame. So too, I think the Dow is peaking here. Maybe the S&P peaks sooner rather than later. I'll be watching. I just want to say, it's not just the RSI and the MACD forming these divergences on the S&P 500 weekly chart. In other places like momentum here, again, momentum We had that sell-off there for the first diversion, so now you form a triple negative divergence. And it's marked bottoms, marks tops over here at the 2022 top. And again, here a triple divergence developing here as well. And again, the bullish divergence at the bottom, the bearish divergence at the top. Another thing to be aware of on the daily chart, we have this divergence very similar to the Dow, MACD. The RSI looks like it's gone a little bit higher, but it is turning down. Candle of indecision, and then we had a sell-off and a rebound. We have a bullish hammer or a hanging man if we try to go a little higher. But again, we came to this horizontal level of support and we bounced. Look at that right there. If that's the case, again, we could try to go higher if this level holds as support. But this formation, talking about in this video, looks very similar to the January 2022 top. And again, we had that bearish topping tail the day of the Fed day. It was negated in that we closed back above it. Again, candlesticks mean nothing unless you get confirmation and a follow through. So could we top as soon as next week? Maybe. Take a couple more weeks, early or mid-October? Possibly. We need to be very alert to what's going on right now because a top is likely about to happen. Again, if Nasdaq tries to go fill the gap immediately, maybe at some point next week, then S&P can still go higher. We had this divergence at the resistance area. We tried to get above it and it failed. We tried to rally above it again with the Fed and it failed the Fed day. The day after, we got this gap higher. But look where we pulled back on Friday. We pulled back on options expiration here, back to this level of support, and we bounced. So we'll be watching to see, do we go higher? So does Nasdaq begin to make its way up to the 20,400 area point next week? These divergences may be that it just gave us a pullback to back test this level right here. Same thing with the Nasdaq. Do we just start going parabolic like we did over here? Nasdaq move towards 20,400 and S&P go higher, then begin to complete the top. And again, could see the top form next week, could see it happen the next couple of weeks, but I do think we're going to see a top. So again, we need to be paying very close attention. Right now, we're bouncing off this horizontal support, which was a July high that we broke up above. That is where we tested today and bounced here on Friday. Now again, maybe the divergences, again, maybe we go a little higher and then we pull back, then get another thrust higher and this drags out a few weeks, but maybe it doesn't. Maybe this divergence was just a pullback to the support and we're now going to try to go a little bit higher. Could form a divergence in this most recent price action here or a triple divergence that gives us a top. And again, like I said, possible we see something next week, the week or two after that, but I do think it's going to happen. I know the future, I'm just looking at support and resistance. I'm looking at history, looking at those weekly and monthly charts that are suggesting top is about to happen. I'm looking at the recession indicators that are warning stock market is likely going to begin to price in a recession. Reliable recession indicators warning we're about to have one. Now again, I told you that I was expecting Nasdaq to come fill this gap. I still think it's going to do that. You know, the question, and one thing I've been thinking through is maybe the S&P peaks before the Nasdaq does that. I thought, well, maybe the Nasdaq does it and the S&P will peak right at that time. Maybe that it doesn't play out that way. Maybe S&P and the Dow peak, still see the Nasdaq attempt, you know, maybe it pulls back or whatever. Maybe they just start going in the opposite directions. But does the Nasdaq fill this gap? I think it will. But one thing I've been thinking through is that maybe I'm wrong about the S&P topping when the Nasdaq fills this gap. The S&P may top sooner before the Nasdaq fills this gap. Does the Nasdaq have to fill this gap? No. I think it will fill this gap. Yes. The Nasdaq's forming a major double top, very similar to the double top Bitcoin has formed. Here in the daily time frame, we got that candle of indecision on Thursday. I told you we had the topping tail here. I told you we could get a pullback if the topping tail is confirmed and gets a follow through and then build momentum to go higher. Again, the candle could be negated, and it was negated just like the Dow and the S&P. We closed above the candlestick. We had break above the declining trend line. I told you I was watching the trend line, and eventually I thought it would be broken. So now do we just go parabolic, like what we had over here, and we start moving towards that level sooner rather than later? Or do we see the S&P and Dow begin to peak, and we reach this level at a later date? So we'll be watching. I do think you got probably a pretty good chance you're going to fill that gap. Momentum here still bullish, still going higher. So we'll see if we get something like this or not. We are forming those negative divergences in the 60-minute time frames. But as I said with the Dow, we may go a little bit higher, another reference point of a divergence. So we'll see what happens here with the Nasdaq. But like I said, I'm watching this gap. We did break the trend line of resistance. So again, looking for that double top to eventually finish. Now, if it doesn't drag out into October, if we get it more here in September, then maybe we get something like that. Maybe we come up here and then boom, by late September. I'm telling you, I'm rethinking through 2001 and 2007. Okay, we peaked about 3.5 weeks later. Well, 2007, when S&P made a new high, it peaked the second week later. It's shorter than what I think. I'm saying, again, it may be by late September. Historically, September, October tend to be months with a lot of volatility in them. Now, the S&P and Dow are making new highs. The Nasdaq is not. Again, I told you that Nasdaq peaked on July 10th. I still think that. This is the linear scaling. We bounced off of this trend line with Nasdaq right here. My guess is we're going to go a little bit higher and try to fill that gap at 20,400 and then come back and try to break that trend line. Here's the channel from the pandemic low. And again, we turned right off there. I talked about these trend lines intersecting early July leading up to that July 10th peak. CPI reversal on July 11th. I told you this is why I think that we peaked. So again, my guess is we're going to go back and try to fill the gap at the 20,400 area. I do think Nasdaq has already peaked. Positive things have happened. We got above the trend line on Nasdaq. This is a 60-minute chart. We got the 50, the green line here, back above the 200. A couple weeks ago, I was looking for a bottom and a reversal to happen after we sold off with the jobs report. We had this divergence form that gave us the false breakouts above the trend line. Then we got the real breakout the day after the Fed pivot. So what I'll be watching is, do we get a pullback and a back test or try to fill the gap? Or do we just keep going? Over here, well, we just kept going. We just kept going and we went parabolic. Do we see something like that here and fill that gap maybe as soon as next week? So what I'll be watching on the Nasdaq is, do we get some kind of volatility or not? Do we get something like this? Moves up and down. The move over here up, the move over here down, then this one after. They were kind of parabolic moves. We see something like that here to come up and fill our gap sooner rather than later. Just some things to be aware of, to be watching. And like I said, again, the top may come in sooner rather than later. You have to go 3.5 or 4 weeks. You see it in 2 weeks. A week here following the Fed pivot, Again, when we were getting red bars with the oscillator in the weekly time frame here on the S&P weekly, I told you I was looking for green bars to show up, new highs on the S&P. We now have that. That in sooner rather than later, next week. Go on a few weeks to complete the diversions. But again, we had this divergence give us this sell-off. Now we're getting another reference point, a triple divergence. Same thing on the MACD. Again, still below the signal line. We'll see if it gets back above it or if it turns off of it as it did in 2022. By the time the red awesome oscillator bars show up in the weekly time frame, S&P will have already likely peaked. Same thing with Nasdaq now. Again, Nasdaq 100, we saw the Nasdaq get above the 10-week moving average over the last 2 weeks, and then now we're seeing the cloud flip back to green, bar flip back to blue, and we get another green bar. So again, looking here for a lower high to finish. Could finish as soon as next week, shortly thereafter, the next few weeks. Like I said, I think Nasdaq's already topped. Nasdaq weekly chart here. Now, I want to continue to point out the signals are bullish. I told you, for the jobs report, I was looking for a bottom. Inflation data, we got it. We got the bullish inside day. I told you I was looking for my signals to turn back to bullish. They ended up turning back to bullish. They remained that way. Watching to see the next time they turn back to bearish, what happens. Signals remain bullish. Nasdaq daily chart here. Same for the S&P 500. Signals remain bullish. Bullish inside day a couple of weeks ago after the jobs report. I told you I was looking for a bottom. We got that bullish inside day. I talked about that at great length and detail. We started moving back up, confirming that pattern later with the inflation data. Signals remain bullish. Watching to see if they start to turn bearish next week or in the following weeks.